Okay, and we all know how the crude oil affects the grain markets, so we're going to go to the grains next. Now we've got conditions reports today. We've got big reports Wednesday. What does all this mean to ending stock, supply, and price?
Let's go ahead and take a look at that and run right down the list. In terms of things we talked about last couple of weeks, we already pointed this chart out to you. This is what USDA has done with corn yields in the past, in fact, since '93 or so. And generally, they don't like to change them, but sometimes you see up and down. Obviously, we're going to be increasing up on the next July 9th crop report. But what's interesting is they usually make a pretty moderate increase, 3 to 4 bushels is what they're going to add on top for corn yield. Of interest, as far as this afternoon's reports, they're talking about a 1 to 2% decline for corn conditions. This is still going to be a pretty darn good number, and also still puts us higher than any of the 2009 levels still. That's also a bearish factor there. I just want to point out our crop condition model we talked about in previous weeks. Looks like we are still at levels even 170, 177 or so, and this is without any type of adjustment for the season. Once you take off that normal seasonal type of adjustment, you're still at something extremely large. 0.5 is what our current yield is based on these crop condition models. And of course, we do have to caution, as we said before, when we have an extremely great year or an extremely poor year, the crop condition model gets a little crazy and exaggerates the size of the yield issue here. But the main point we can point to is, you know what, we're still far above what USDA had back in June. That's the main thing we're going to look at right now. So it's very easy, it's very fair to say USDA is going to add 3 to 4 bushels on this July report. And if we plug in about a 3.5 adjustment in terms of the yield, as we looked right here, you can have a 167 yield. Also throwing in our acreage report estimate. In fact, we're going to be on the higher end of the estimates, almost about 1 million extra acres is what we're plugging right now for planted acres. And that gives you about an extra 300 million for planting or for production. As far as the bottom line numbers, after some adjustments on demand, you do have about a 200 million increase plugged in here for ending stocks. So USDA is going to go from a mid 1.5, almost 1.6, up to a 1.8 is what this will all look like by the end of the picture here. So, you know, in terms of the bearish issue, that is bearish. In terms of, is it exaggerated? No, it's not. We're actually not hitting that magic 2.0 level that a lot of people are trying to talk about right now. So our numbers for corn, at least, are going to be a little mixed here as far as the big picture, obviously a little bearish. One thing I will point out is here's the hardest part of this report. So we not only have these acreage numbers here, but a second report is released, the quarterly grain stocks. And here's where we have to guess usage for the past quarter. What's kind of interesting about this one is if you look at these bars here, what makes usage, here's the food, seed, industrial. This includes ethanol. We have good numbers on ethanol. There's not many disagreements on this one. The blue bars here are exports. We have accurate data on exports. Here's the white bar, which is for feed and residual. This is a real big question mark because there actually is no accurate data at all for feed usage right now. So in terms of this one, this is the big guesstimate. And look what happened to USDA, what they said back in the first quarter of last year. They said it was up 4% compared to last year. Next quarter, down 13% compared to last quarter. This really doesn't make a whole lot of sense. It doesn't really match up at all with what livestock numbers are doing at that time. This is a very tough category to guess. So I want to point out, if there's going to be a surprise in this report for corn, it's not acreage. It is going to be the quarterly grain stocks. So pay attention to this one very much. We could have, just like last time, I don't know if you guys remember back in the March reports, the average guess was about 200 million bushels off what USDA said for corn quarterly grain stocks. And those numbers get put right on top of the bottom line year-end numbers. So for watch the quarterly grain stocks, more for price direction on this report on Wednesday. As far as the soybean numbers, we all know about the overall good crop. At this point, though, USDA does not like to make hardly any adjustments to yields. So at this point, and even when they do, it's going to be up 500,000. This is on the July 9th report. So we're not going to look for any changes for USDA for yields for next month's report. With that plugged in, and also with this acreage numbers we have, as you can see here, we're dropping acres by about 500,000 acres. While we're doing that, I will point out the average trade guess does show actually a small increase for beans. So there's 6 of the 18 analysts who put out estimates for acreage actually had higher soybean acres. We're one of the 6 who believe that they will fall. So keep that in mind here. But with our numbers, we're looking at a small decline here compared to USDA. Here's this 360. We're at about 330 here. This is not going to change any numbers at all for price projections or anything like that here.